I'm going to ask Juan and his fans to move backstage. Thank you. Okay, so don't go anywhere, anyone, because we have a killer panel coming on. Let me introduce them properly. Okay, so for a startup, sometimes it's a good thing to be acquired, especially if it's by a bigger and a more established company. But sometimes to be acquired could be very, very nasty. So what happens after a company gets acquired? In order to tell us the good, the bad, and the ugly on this subject, we have a panel of experts in the matter because they have gone through it themselves. The person that has taken the challenge to moderate this killer panel, he is the co-founder and managing partner of GP Bullhound, and he is one of Europe's best-known best-known technology investment bankers and experts in international M&A and capital transaction for high-growth businesses. He is the one and only Per Roman and his panel. Please give a warm welcome. Welcome, guys. Welcome, Per. Just sit on the one of the sides. Thank you. Thank you. Welcome, everybody. Okay, take a seat. Thank you. Come on, another one. There. Let's warm them up. Thank you, guys.
Thank you. You're not feeling too tired, I hope. Anybody tired, raise a hand. Anybody want to get out of here, raise a hand. Well, it's good to have you here. It's great. And it's fantastic to have these illustrious entrepreneurs here. I mean, it's a testament to the success of Spain, actually, to be able to put together with such ease a panel of successful founders that have exited their businesses, not just built them. And I thought, rather than me doing introductions, why don't you all, I mean, maybe starting from the far end, just give a short intro of yourself, the business you built, and who you sold it to. So
Great.
Give everybody a bit context.
Great. Hi, I'm Chema González. I founded Alterkeys 4 years ago. It was a website that you can rent your accommodation from professional people all around the world. We were operating in 42 countries. We had over 100,000 properties all around the world. And we sold it last year to Roommate to be part of bmate.com.
Very good. I'm under Michelena, one of the co-founders of Ticketbis. It's a marketplace where the user can buy and sell tickets. We founded in 2010, and we sold it last year to eBay. And at the time we sold it, we were doing over 100 million revenues, 400 people across 47 countries.
I'm Zaryn Dentel. I started Tuenti, which was the first probably social network in Spain. I think it was the oldest company probably up here on the stage. Started the company in 2006 and sold it to Telefónica in 2010. And I actually have continued working with Telefónica until today. I'm not the CEO anymore, but I helped them with digital strategy in 2020. If you don't know what it was, we were a local social network, so we never went outside Spain, focused exclusively on Spain, built an invite-only model to become incredibly, it was massive. At our peak in Spain, we were actually 20% of all web traffic in the country. Then we, as Telefónica acquired us, we changed the model, focused more on digital communication, voice over IP, messaging, expanded to South America and different markets where Telefónica is present with its Movistar brand, and I've been working with Telefónica on their digital strategy.
My name is José del Barrio. First of all, I would like to say that I'm really proud to be here today because the spirit behind this event is fully aligned with the vision we have in Samaipata Ventures, the venture capital I've founded, about the opportunity behind the opportunity we have ahead in Southern Europe, especially in Spain. We are really, really optimistic about the landscape. Before I launched Samaipata Ventures, this venture capital firm focused on marketplaces and e-commerce in Europe, I was the founder of Nevera Roja. We founded in 2011. We sold it to Rocket Internet 2015, when we had around 4,000 restaurants. We were the leader in Spain in the food delivery category, and we were generating the restaurant around 40 million euro in GMV.
It's pretty impressive, huh? It's a fantastic story, all four of them. But I tell you, before I launch into questions, is business that I run. We've been selling companies for a long time here in Europe, and we've sold a bit over 230 companies and counting. So I think what we're going to talk about today, I've seen a lot of tears, a lot of happiness, seen a lot of craziness actually. It's a very challenging process to go through the sale of a business, and then even more so to recognize day one after the sale is done that, hey, it's actually no longer my business, somebody else's business. What the fuck?
Yep, exactly. Yeah.
You know, you spend every waking, sleeping hour thinking about that business and making it happen, and suddenly it's there, but it's not yours.
Yeah.
What did you think about that?
Well, actually, it's tough to take it. I still believe it's mine. Actually, I was going to wear the Alterkeys t-shirt today. But yeah, you got to realize that it's no longer your baby, or perhaps you share the paternity with them. But I think that we have the same deal in terms of we need to stay at least a bit in the company to protect the child, and also because our advice could be helpful. So some way it was still at least our nephew.
It's interesting.
Yeah, we sold the company 2 months ago officially, right? So,
so you're just realizing this now.
Still my baby is like, okay, this is mine, don't take it from me. So it's at this moment it's very, very hard because it's exactly what you're saying, right? It's considered still my company. So when I see some decisions that actually don't align with what we think should happen or how we think that it's going to destroy value in the company, it's like, shit, you shouldn't do that. We should do something different. And it's true what you're saying. You should realize that actually it's not yours anymore, and there is some decision that you're not going to take anymore. And I'm at that moment, which is very, very hard to do that step, to take that position.
I'm going to come back to that because we can have a lot of fun with that discussion. But Zaryn, you sold longer ago. You've had time to readjust.
Yeah, so I think that there's a part of you where you always feel like it's your baby, right? And I obviously still feel that way, even given the fact that the business has just changed massively, but you have an enormous amount of nostalgia for everything you went through, all the challenges that you encountered along the way. The biggest difference for me was the team, When you have a team of people that, our team was very international, people came from all around the world. I started the company when I was 23 years old, and so we were very young and aggressive and diverse, and it's a different type of profile of person as the company grows. And so, the company today, it's still the people. There's still a lot of people that I care about, and that's why I feel really connected to the company still in a big way, is all the people on the team. But it's a very different team from the team we were when we were like a bunch of crazy 23-year-olds. So I think that as the team changes, it becomes a different animal.
So you were happy with that change?
Yeah, I mean, I think it starts out a baby and then it grows up and it's a bit older. Now we're all like in our mid-30s. But I think that there's always a part of it that feels like your company. But I think it's definitely when the compensation structure changes and you don't have chunks of equity that you can give to people that could have a massive upside, the profile of the company, the risk profile of people, is a bit different. It's a different environment, right? Because you're part of this corporate environment.
Sure.
One of the biggest challenges I had, not to talk too long, but one of the biggest challenges I had after acquisition is that just we couldn't get any decent compensation for people on the team. There's no way to get good equity compensation when you're part of a big corporate. Right. So the compensation structure changes a lot.
That's true. We'll come back to that as well. It's a great topic. But José, you sold your business not that long ago. You also sold it to a very aggressive buyer with an unusual culture in its own right. Tell us about that.
Yeah, that was, at the very beginning was a shock, was a massive shock. Me and my co-founder, we were like, shocked completely. It took like a few weeks, maybe a few months to realize that the baby was not yours anymore, and that you weren't leading the business anymore. The decision were taken from Berlin. Yeah. And it's not that easy. It's obvious, but it's not that easy to realize. So in our case was a bit different because we rely or we trust in the capabilities of these or the skills, I would say execution skills of the Rocket Internet. It's very well known because they are the best in execution in the world. So you are like, okay, these guys know how to operate the business, and yeah, it's hard basically it's about freedom. I think we lose freedom to decide what we wanted, and
Which is unusual when you come from a founder
yeah,
background.
completely. No,
Used to calling every shot, color of business cards. I mean, down to the dumbest detail, right? You'll decide it.
Yep.
But so, let's stick with that. I mean, my experience is that very, very few founders and CEOs stick around with the buyer for more than maximum 12 months. And even most that I know find it a suffering and really only do it to get the earnout, to be honest. So let's go around the table on that. For how long did you stay around?
Well, 1 year and a half.
Year and a half.
Yeah, year and a half.
Huh?
I was supposed to stay a bit longer, but it
Did
was...
you buy one of these combs with, days on it, like click, click?
I was actually quite happy because my new boss, Kike Sarasole, is a party guy, is an animal party guy, an animal also workaholic, so it was easy that side. We were supposed to...
So your hours went down. Your alcohol level went down.
Exactly, with alcohol, the things are easy. No, we were supposed to stay 3 years, but we reached an agreement that I should fulfill any other dreams that I would have and do new things. So I stay a bit more than that you said, your average, 12 months, but I still didn't make it to 3 years because there are more things to do. And we were actually discussing this just before they come here. It makes sense for a company when they buy you to keep you there, but actually as a human being, you did your own business because you're not supposed to have bosses and you're supposed to have and value your freedom. So by doing that, by staying in the new company, knowing that you're not the own boss, it kind of unmatch your personality.
No, but I think that's a great point. Andrew, your comment on that is, when I negotiated deals, it's a long negotiation around how long the CEO should stay. The buyer wants the CEO to stay for a long time.
Of course.
But it's a false economy because founders are hopeless to have in large corporates.
Yep, totally.
You don't want to follow any orders. It's actually very destructive for the buyer, right?
It is totally destructive for the buyer, but I understand them because what they bought when they bought Ticketbis, when eBay bought Ticketbis, what they bought buying was the team and the expertise of going international. If you look at rational numbers, you make the numbers, the money they paid didn't make any sense if it wasn't for the team. So I understand the point of view. We want you to stay around and keep doing what you are doing and grow the business. The problem is, one thing is to say, keep doing what you're doing. The reality is, once you enter a big corporation, there is a lot of things that changes. System, decision-making. Actually, I was saying before, we did an offsite with a bunch of people from StubHub, a bunch of people from Ticketbis, and it was a completely different, when we prepare meetings, it was, okay, you have a meeting, you have a clear point of exactly what you're going to do, and you have a clear outcome. This offsite, was the first big shock for us. We have 50 people in the meetings. There was people talking when there was not their topic, so everybody was giving their opinion, so there was pretty much no organization. At the end of each one of the meetings, there was no outcome, nothing decided. So by
complete waste of time.
So for me, it was like, what the hell is going on? I don't understand anything. So I went to my boss and to the head of the strategy and said, look, guys, I don't understand what's going on. For us, when you do a meeting, it's a meeting with a purpose, and this is what the outcome needs to be, and you have a clear strategy what you're going to do forward. Say, no, but this is different. Here, everybody needs to participate. They need to be part of it. Then it's what we call the Californian style. I was like, what? Californian style? What is this? No, everybody participate, and then decision, I take it in another stage. I take it later. Okay.
Yeah.
So it's like, okay.
In Silicon Valley.
In Silicon Valley, right? Okay, exactly. So, yeah, exactly. So. Okay, great. Thank you for clarifying.
No, that's very... But Zaryn, you not only stayed with the business, but you also then ended up having another gig at the buyer.
Yeah, I mean, I'm still there.
Yeah.
10 years later after starting the company. I think that it's the honest truth is that it's easy to criticize the buyer. Obviously, the company that you've joined. But I think there's a lot of great things as well about experience and. I still have a fantastic relationship and work with a lot of really cool people in Telefonica, and they have a really large scale and user base, and there's a lot of opportunities that I think eventually over a long period of time will come to fruition and be successful. there's been a lot of pain along the way. If you can imagine California style, imagine Telefonica style. You know, a large Spanish telecommunications company with a very successful, very profitable business is a hard place to make changes in.
Yeah.
And you know,
An oil tanker.
day one, you know, after the acquisition, I ran in there. I was like, okay, we need to like take away, you know, we need to push our app instead of SMSs. We need to push our voice over IP technology instead of phone calls. Let's drop the price. Let's preload it on every phone. We can be absolutely massive. We can beat WhatsApp. And it's like, no, you can't affect our existing revenue, you know. So, you know, that's the downside. But then the reality is that I'm still optimistic, you know. 6 years later after the acquisition, I think there's some great people. There's a new president at Telefonica. I've got, you know, really, you know, I wouldn't probably still be at Telefonica if it wasn't for him. So I still think there's opportunities to do things. So, you know, and it's not complete all my time. I can still do other things. So I think there's a mix of experiences. You know, if you have good people in the corporate that you can work with, you need to find those people, connect with them, and things can work out.
But do you feel that is your voice getting heard?
Oh, absolutely, yeah. I think, you know, the thing I've found at least is like the top level management in a lot of companies is usually pretty good. Yep. The problem is when you have you know, hundreds of thousands of employees, it's impossible because it goes from the top. They're like, this is fantastic, we need to do it. And then it gets down to like one layer below and they're like, yeah, this is really good. And then it gets down like 2 or 3 layers below and they're like, nah, we're not doing this. You know? And so it's really difficult in those big companies to push things through, even if top management wants to push it through.
That's true. Well, Jose, Rocket is an exception to that, I would say. It's a very fast-moving large corporate.
Yeah, probably it's a counter example. It's like the opposite. Truth to be said, I think it's a great challenge to integrate a company. In M&A, you know it better than us. It's really complicated to integrate companies successfully, especially when you have like a very, very clear playbook. In our case, they have a clear playbook to execute super fast. They are able to open like 20 countries in 3 months. It's absolutely awesome, the speed they can reach. When you have that kind of playbook, if you mix that organic growth with M&A or inorganic growth, it's really complicated to mix those two playbooks. Yeah. So you have 100 people or 200 people or whatever working one way, and you have your own playbook. You have like 15,000 people spread around the world. How do you combine that? You need to integrate systems or not. You want to give them some freedom, but you have this heavy headquarter strategy that it's what gives you this speed that, like, I don't know, technology, marketing, everything is led from Berlin. So how do you combine this acquisition with existing structure? That's a great challenge and very difficult. In our case, it was especially difficult because they were planning an IPO. There was one day in November 2014, they say, hey guys, next year we are going to go IPO.
Exactly, changes everything.
Yeah, so, and they don't have an asset to IPO. They have like a, I don't know.
Story.
They didn't have any story. They have a 200 million asset, and they wanted to build something like 2 billion asset in like 12 months. That was crazy. It was a rocket style, no? Rocket internet style. Mm-hmm. So they start building assets, or building or buying assets all over the world. They did like 20 acquisitions in 2 months. They were building this huge asset in 12 months, more or less. And I was right in the middle of that process. I was supposed to stay there until the IPO at the end of the year. But in the middle, you have people, you have a culture, you have incentives, you have founders, you have everything. And how do you manage that complexity? It's extremely difficult. So in the case of Rocket Internet, it was that I have a playbook, you have a culture. My playbook has been proven successful. Let's do it my way. Yeah, and I don't care what you have.
No,
yeah.
Fair enough.
Fair enough.
You got to do it that way, whether you like it or not.
Yeah, take the technology team, get rid of them, and just integrate in like 4 months. And it's like a pisonadora, I don't know the name. Pam, 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 pam. Yeah.
But let's switch topic for a subject within the topic is, I mean, selling in business is not just about the buyer and the founder, it's also about the whole team that you're going to take with you on this dramatic change. I mean, you've spent 3 years, 5 years, 10 years telling your staff that we're the best in the world, we're independent, we're going to conquer the world this way. And suddenly you're going to announce that, listen, we're actually not going to do any of that anymore. We're not going to be part of something else. I mean, you can do that in many different ways. I mean, starting with you, when in the process did you share with the team what was going to happen?
Me?
That was probably, yeah.
No,
He
you
says
take it.
no, he says sorry.
So, you know, when did I share with the team like what
What was going to happen?
You know, I think one of the we have a very open culture in Tuenti. So I mean, every single Friday we usually do like beers on Friday. We order pizza. Sometimes we order McDonald's of like 200 cheeseburgers. It's pretty fun. But every Friday we basically do an all-team meeting, and we try to be as transparent with everyone in the company all the time about what we're doing. And the reality is that for us, we sold the company to Telefonica in 2010, August 2nd, 2010. And, that was a very crazy time in social networking. And we really believe that working with Telefonica and integrating our application into their service, that we could really expand our scale in a lot of ways. And so that was really exciting for the team. I mean, everyone was like, wow, we're going from Spain, we're going to be in like Brazil and, South America and all these markets, we're going to do all these things. And that's really exciting, right? And so, you sell a pretty good story, and then, you start realizing the reality of the execution is a lot more difficult than it seems because there's very different cultures in both companies, right? And so I think what happens is over time, it gets harder and harder, but in the beginning, it's really, there's a lot of optimism and excitement about all the different opportunity that can come from the synergy, right? I'm sure.
But to be specific, I mean, the sharing with the team, was that something that gradually happened as they were courting you, or was there a day when you stood up and brought the team together and said, listen, this is going to happen, and this is why I'm excited about it?
Yeah. I mean, obviously, you have to be super confidential about the operation itself. And then there comes a day, it's like, okay, we're having an emergency meeting, everybody needs to come in. I mean, the reality is that with our company, I think everybody in the company, we had 200-something people on the team when we sold the company, and I was really, I made a big effort to make sure every single person in the company had shares. So everyone had shares. Everyone had shares. So we had like hundreds of, tons of people going in. They had to sign in the notary. So how do you keep that a secret, So it gets up to a certain point, and then when the negotiation's pretty clear, everybody in the company knew about the deal, way before it was announced because they had to sign on it.
Yeah. And Andrew, for you, I mean, you sold your business to, I would say, the most obvious buyer in your space.
Yeah, totally.
Right, so that was kind of a given, and in a way, an easy story to present. But also due to the competitive issues, maybe one where you had to keep it secret extra long.
Totally. I mean, it was a very long process to start with. The first contact we received from the first contact, they make an offer it was like 9 months later. We rejected the first offer, and then it took another year until we we took 4 more months to get a second offer and another big due diligence process. So totally, between the first contact and the final announce of it, it was almost 2 years process, a very, very long process. And how you keep that, it's supposed to be confidential, but how you keep that confidential is very hard.
Yeah, just in your body language.
Yeah, no, we try, and it was also very hard because at that point was, you're negotiating the sale of the company. What you don't want is to raise money, right? I mean, you are, okay, I'm not going to raise any more money. I'm going to hold on some plans. And until that point, we have been extremely fast. We execute, we do this, and papa. So at that point, there were people were coming with ideas. Hey, let's go to this market and let's do this and this and this. Say, hold on, wait a couple months, right? Like, what the hell is going on, right? something, these guys, what, I don't understand what's going on, right? So there was a lot of noise in the company. There's nothing was going on. We would keep saying it was a capital increase, but people didn't believe us. It was like, it's capital increase. It's something.
See guys flying in from California.
Exactly.
What kind of capital increase are we talking about here?
I mean, until that point, we would say we're going to do a capital increase. We closed it in 1-2 months very fast because we have very good numbers. It was very easy to close. So people start like, something is wrong here. So there was some noise in the office that actually we're going to be acquired, and there was different there was different rumors of who was going to acquire us. But actually, the day we needed to do it. We did it in one day, the announcement to everybody. So we have some people over the world before, but not many, like 10 people over the world before the announcement to help us basically on the due diligence. That was the key. We needed help on the due diligence. And then the day they announced, actually I have a video, which we announced it. There was silence in the office, and then all of a sudden people get up and start clapping.
Really?
Yeah, because you think about it, you say it's the obvious buyer, but it's StubHub, the company who acquired us, has been able to win a $4 billion business just in the US, right?
Yeah.
We have been very good at expanding a lot of markets, right? So for us to be acquired by the model that inspired us was first amazing, and second, it was going to help to go much deeper in each one of the markets we're present, right? So everybody saw it like a great opportunity. Wow, we're going to be part of a huge group who actually knows how to go much deeper, is going to invest tons in the company, so people were extremely excited.
But did any of you have somebody in your management team maybe that were really sad about it? They came afterwards and said, why are we doing this? This is horrible. You haven't had that?
Well, I think it depends on who's the acquirer. And in our case, it was someone that was going to hire that twice double the team, acquire a lot of people, make it grow, and the same as Sander, probably. If it's a different acquirer, for example, a competitor that it's looking for synergies, so getting rid of people, that's a completely different story. I think that depends basically on who's the acquirer.
But I think it's a fair point. I mean, all of you represent acquisitions that were for growth and strategy, not
Correct.
Not to accrete profit. Or,
and all our management has
sure
shares in the
my
company, so they were very happy. Once you have shares in the company, we're very happy at the acquisition, right? At least at the beginning, like, wow, this is awesome, great.
Well, we're going to switch topic again, because what I see often, and I'm not sure it's true for any of the four of you, but I'm going to dig in this a little bit, is when you start the process of a sale, often the founder has a very strong view. It should be this buyer, that buyer. It fits like this, and there's a lot of talk about 100-day plans and integration. And then as you kind of go through the process, the mindset of entrepreneurs, not you, I'm not saying, but many that I work with, shift to more and more thinking about the money they're going to make. So the 100-day plan kind of goes out of the window a little bit, and it's more thinking about, with all this money, I can do all these cool things. And then I also find that many times that some night or some day in the last week, there's this moment of complete regret. What the fuck am I doing? Maybe I shouldn't be doing this right now. Maybe I sell a year later, 2 years later. How was that for you? Did you do any of those feelings? You think about the money?
I did, obviously, think about it. But in August was super fast. The whole process took us around a month and a half to 2 months.
Whole process?
The whole process.
From first contact?
Yeah, we received like 4 different bids, 4 different term sheets. We did 3 due diligence, full due diligence in that month and a half. 3 different negotiations of the SPA. It was too fast to think very much about that, and the solution was like the perfect one. Was a high price with an acquirer that was going to make it grow, because they were IPO in this next.
So it felt pretty obvious.
Yeah, it was like a no-brainer. Our investors, truth to be said, we didn't have the 100% of the control of the company. So you have to ask the investors, and they were seeing like a money multiple.
Yeah.
They were like,
sell it.
it's human beings. So for us was like a no-brainer at the end of the process. Maybe in the middle you have some doubts, but it was too fast to think very much.
And Chema, for you, you had a different type of buyer.
Mm-hmm. Well, at the beginning, we received a purchasing a year before the thing happened, from a different buyer. It was a great company. They employ over 1,300 people, and 2 days after we got the bid, they went out of business. Tough luck. And so we received another offer a few months later, all higher than the last one.
Yeah.
And at the last one, we were actually in the middle, because we were doing a fundraise, and we came across with a roommate in the middle of the fundraise. It was the valuation was around 5 mil only. So we have an offer from Kike to discuss what we could do together. And in the meantime, and when you said about the money, it's funny because we have another offer from a company way larger than Roommate. And it's an international company. They operate in every market. It's also a hotel mainly company. And the cash in your pockets and the stock option terms and so on was way nicer than the one that we ended up accepting. And while we have the two of them, you might ask me, why did I take the one that put less money in my pocket at the beginning and also less stock option? And the reason is very simple.
Is that natural for me as a banker to even consider that? I feel sick now listening.
I consider both, and I thought I was going to feel the same. But with this new buyer, Roommate and BMate, we thought, and we still think that we were going to create something different. There were plenty of Airbnbs in the market at the time. There were only one BMate at the time, which was BMate. So even though at the beginning the conditions were going to be lower, if things turn out well, which I hope they do, we're going to be part of a better company, a more unique company, and hopefully more money in your pockets at the end of the day. It's all of it. It's all of it.
Okay, so it was the future upside
Yes.
that made it feel the better package.
And also
you still feel that today?
Yeah. I do believe it, and still the management team of the new company, Roommate and so on, is awesome team. So I think they can make it happen. So I'm still hoping for my bet to come through.
Great. Well, we have stats also on earnouts, and less than half of all earnouts get paid out. I mean, sometimes because the company doesn't deliver, but often because the acquirer actually destroys what they've just bought. Not out of ill will, but out of just the difference in size of organization can make it very easy to just suffocate what you've bought, right? I mean, you sold Ticketbis at a very strong valuation. I mean, it's a great transaction.
Yep.
But also, it's a gigantic buyer.
Mm-hmm. Totally.
And has the business continued to be successful post-acquisition?
It's only been 2 months, right? So if it gets done in 2 months, it will be right.
Paint on the wall.
Yeah, no, exactly. But it's very different, right? As I explained before, the products are completely different. Decision making is not as it was before. Like, boom, we decide, we execute fast. So we are not anymore a fast executor company. Everything takes time. So we're not able to move as fast as we did before, and that, of course, is going to have an impact on the business. On the other hand, we have access to a ton more of resources that can kind of, I hope, compensate that slowness. So it's a balance at the end. It's okay, I didn't have resources, but I was very good at executing very fast and going to the market and doing whatever needed to be done. Now I cannot do a lot of things. I need to, everything is going to go slower, but I'm going to have much more money in my pocket to actually compensate for that with other actions. So I will tell you, if we are here next year and we've gone this man, I will tell you how it goes. Yeah, I need more time.
And I mean, given that we sit here in wonderful Madrid on a Friday, in party capital of Europe, Zaryn, how did you celebrate when the deal was done? What did you do? What did you actually do?
Whatever you can tell.
I mean, completely transparent.
No, I think, so we sold, I was 27 when we sold, 22, 23 when we started the company, 27 we sold. So I mean, we were all
I'm good. I'm 27. I'm already
it was pretty good. We were pretty happy.
I'm solid.
It was also, it was...
Still couldn't get into a nightclub.
It was 2010, right? So there weren't a lot of, now there's a lot of, there's a lot of activity, a lot more activity in M&A. I mean, this whole conference, like, this stuff didn't exist, in 2010 in Spain. Like, when I came here in 2006, like, we were buying servers. We were ordering servers from Taiwan, like screwing them in on our own. There was no Amazon Web Service. It was like such a different time. So yeah, when we sold it, still, it was a big, happy, successful moment. We started out with nothing, and it was the first time that we had anything. A lot of people.
But you're avoiding
we
the
had
question.
Exactly. How was the party?
Yeah.
Tell us about the party.
Did you take holidays?
Yeah. I went on a good trip. Yeah, I went on a good trip.
Where did you go?
A bunch of places. I had a good time. So yeah, and I think that's important. Also like the stress, and as working in M&A, I'm sure these deals, Jose, your deal was pretty quick, which is unusual, right? Well, but you've been in a lot of process, but like these deals are really, really stressful, right? Until the moment you sign the deal, like I don't know what you guys like. Until we signed the deal in the notary, I didn't actually really think it was going to happen.
Oh, no, you haven't.
And so I remember I got sick. Like I literally, the day after we signed, like I was just like totally exhausted, you know? So it's a complicated process, and you never know what's going to happen until it happens. It's like you don't even believe it, you know? So.
I mean, it's a painful process also because too much is at stake. I mean, it's such a change. You're going to do it again? Build another business and sell it? What do you say?
Well, we will try. Well, now I am in the venture capital business, so it's a bit different. But yeah, maybe one day.
But you're going to get operational again one day?
Maybe. Well, now we're trying to help people to do it. We don't lead it, but we help them to do that many times, we hope.
Yeah, that's good. That's good. Then you can see many more exits.
I hope so. I'm sure of that.
Well, maybe as just to round this off, maybe if you could all just make a comment on what your plans ahead are. Are you going to start another business, or how do you use this experience in a smart way?
Great. I am starting a hotel concept. I started with some apartments in Madrid to test how everything goes. It's been operating for over a year and a half. We would love to. It's called Forever Young Hotels, and we hope to launch the first hotel next year.
Really? Can we come?
Huh?
Can we come?
Of course. But you gotta throw the party first. And tell us how it went. Yeah, keep it
But first, we're gonna go on Zaryn's secret trip.
And doing a couple more things.
Great. So you feel pretty re-energized by that?
Yeah, I love it. I don't think I could work for anybody else, and I think I could. The only thing I could do is start things, and then when they grow a little bit, see if I want to keep them or give it a pass. But that's what I love. And
Andrew, for you, it's still so fresh.
Yeah.
But are you already starting to think about new ideas?
I'm starting on getting a sabbatical or something. I really need to relax because it has been such a long process, so exciting. I took only 2 weeks vacation and then back, and now we're all integration, and it's a constant fight. So I cannot even think on starting something again from scratch right now. I'm sure that will change as soon as these start going down and we start operating in more like, okay, this is how it's going to work going forward. The only thing we're doing is, for sure, with my partner, we're going to put together a family office. We're working on it. We already make 4 investment in startups, and we're going to make some more investment in that area. That's what I'm going to do for the ecosystem. But as starting something new,
yeah,
we'll see.
And Zaryn?
Yeah, I mean, I kind of agree. The same thing. After I've stayed with the company a long time, but for me, it's really exciting to invest in other people. As for you guys, and it's really difficult when you're on your own and you don't have that big team. So when you have a company, you've got a big team of people and fantastic people, right? All these companies are successful. And then, when you're on your own, you're on your own, right? And so it's a little bit, it's different, right?
Yeah,
and it's really difficult, and it has been for me at least, it's really difficult to start from scratch again, because it's a very humbling experience, because you definitely generate some certain skills when you have a larger company, but you need to go back and get some of those basic skills when you're on your own. But no, I hope to start some things as well.
Good. We look forward to hearing about that next year then. Juan?
Yeah, in our case was funny because Inigo and myself, both of us, we thought that we were going to be like very relaxed and like a year sabbatical. And Inigo told me that he was going to start in November, maybe, so almost 1 year after, to start thinking of something, blah, blah, blah. And in my case, the same thing. I talked to my wife, let's buy a house in Galicia, and my family is from there, and we will spend time there, blah, blah, blah. And 2-3 months later, Inigo was starting a startup, and myself was launching a venture capital fund.
Yeah, there you go.
Working like 15
Finding
hours
offices.
a day.
Yeah,
Because when you are really passionate about something, you cannot start with our age. You cannot stay lying on the beach because you need to be back in the game very fast. It's because you enjoy it and you have fun doing it. It's a passion, and especially in this in this world of startups, entrepreneurs that you like, you want to help people doing this. So that's what we think that we did, and I founded Samaipata Ventures in in May, so 4 months
fantastic.
after.
Well, I think to summarize then, so what we've heard here is that it's been very good exit processes. You all are energized. Thankfully, none of you have started to play golf. You're building new businesses. What a great panel. I give them a hand.
Thank you. Actually, let me summarize it then, Per, by these guys, I think, they are work hard, play hard, and then work hard again. Is that right, yeah? Okay, let's say thank you, please, to Chema, Anders, Zaryn, José, and our super moderator, Per Roman. Thank you.